Welcome to Markets Now. I'm Michelle Rupp with Jim McCormick with agmarket.net. Grains are mixed after the USDA report came out. And Jim, let's talk first of all about corn, kind of a bullish surprise there. We did see an increase in production, but a bigger increase in demand, right?
No doubt about it. That was the bullish surprise of the day, Michelle. And it was definitely nice to see. But yeah, the trade was definitely bracing for an anticipated increase in production due to the acreage number that we received there at the end of June. But offsetting it was an increase in exports for old crop and projected new crop. And the big surprise is the raised feed usage in both categories. So the net effect is the carryout dropped for the old crop year. And the new crop year is actually dipped down as well when we were bracing in a trade for a slight uptick by a couple $100 million. So definitely a bullish surprise.
Absolutely. Do you think this will help stop the bleeding that we have seen in this corn market, Jim? Because it's been pretty ugly.
You know, the close today, Michelle, is going to be very critical because we were down making new lows before the report. We reversed after the report. If we can close stronger today and have an outside day up, that'll be a very positive sign that maybe we've at least put in a temporary bottom. But I am a little bit concerned, Michelle, in the long run that we could see more additional pressure. Plain and simple, there is a lot of corn that's still, old crop corn, I should say, still in the farmer's hands. And a lot of that's got to come to market over the next 6 to 8 weeks as we get ready for what potentially could be a record crop. And I think that will, unfortunately, more than likely put additional pressure on the market down the line.
No doubt. But at least for today, it's a little good news. I think down the road, though, there are going to be questions about whether yield's going to have to go up from here, but also whether these demand projections from USDA can hold, right?
Exactly. I mean, that's the real question. I mean, like I said, it was a surprise for them to make that big of a revision up. But obviously, they're reading numbers that say the demand's there. The old crop demand, you know, that calendar year ends very, very quick. The new crop, obviously, we've got 13 months. They have 13 months to be proven right. We'll see what happens. But like I said, right now, we will take it because after the bloodbath we've seen, it is nice to see some positive momentum, a little bit green on the chart, and some, like I said, friendly news from the government.
Gotcha. Soybeans, no change on yield, just like we had no change on yield on corn, but with the 400,000 acres less production or less acres towards production, we actually saw a little bit of a decrease in ending stocks, both old crop and new crop, right?
Exactly. And, you know, nothing ragingly bullish. I'd call it slightly friendly. The big question for the beans still going to be the demand aspect, just like in the corn. The demand is what, roughly 125 million, I believe, bushels above year on year. That's export demand year on year. But if you look like sales for new crop are horrendously bad, to put it bluntly. China just made their first purchase of new crop beans here this week. So I believe there's a very good chance, unfortunately, that the government's going to have to revise that demand lower. And if they would, obviously, unless we find somewhere use for it and we lower those export demand, the ending stocks will build up. But like I said in the corn, Michelle, they've got about 13 months to be proven right. So they may stick with that strong demand number on the export side until we actually get a better handle on how that South America crop looks this upcoming winter.
Absolutely. Numbers as far as South American production, we should talk about those as well, because we didn't see a whole lot of change. Is that disappointing, you think, for the market?
Well, I think it's status quo for the USDA. They've been really stubbornly holding their numbers high compared to the South America counterparts. So I think it was a little bit disappointing. But the fact is, I think the overriding aspect right now in the beans is for the U.S. right now is going to be production and what happens going forward in the latter half of July into August as the beans are made or broke in the month of August weather.
Right. So we said maybe today's report helps to at least stabilize the corn market here. And obviously this should be a little bit friendly longer term for soybeans. But, you know, does this change the narrative? Does it do anything to get the funds to push out of this short position that they have, which is what, record short in corn now?
That's the $1 million question right now. I mean, if you're a producer sitting out there and need to unload some old crop bushels as well as try to get some new crop, you're hoping the funds will use this as a signal to get out. And now, like I said, I think if we can close higher today and have an outside day up, closing strong on a Friday, maybe that is what we need to do to nudge the funds out of their positions. But on the other hand, the funds do know, unfortunately, the farmer is sitting in a very precarious position right now, timing-wise. There was about 3 billion bushels of corn sitting in the farmer's hands as of June 1. Now, some of that corn has come to market. A lot of it hasn't, from what we understand. And that becomes a problem because if we get toward the end, closer to harvest, the producers out there have got to make a decision. Are they going to move the old crop and make room for the new crop, or keep the old crop in the bin and then take the new crop directly to market because of lack of space? The odds are high that the old crop is going to be coming to market. And are the funds just going to wait out the farmer and say, hey, as that farmer dumps that corn to the market over the next couple of weeks, they're going to be the one that pressured the market down, and we're just going to sit with our net short position and take advantage of it, unfortunately.
Absolutely. I left wheat separate because pretty much a bearish report for the wheat market, wasn't it?
Pretty much was. Crop got a little bit bigger. That doesn't surprise us. Overall, the wheat yields have been really, really impressive, as you mentioned. Even in South Dakota, you're talking about 100 bushel wheat. I think there is, unfortunately, a chance, Michelle, that when we get another revision a month from now in August, this wheat crop will continue to get a little bit bigger.
Now, demand has been a little bit better on the export front, Jim, as we've started this new marketing year, but overall ending stocks did go up in the report today. Do you think that's kind of the trend that we see going forward too?
That'll be the trend. Now, the only outlier would be the crops in in parts of Russia and all that. If that crop would get smaller, maybe we can get more demand. But right now, the wheat market's biggest problem is we just do not have enough demand. And that tends to keep pressure on the market as the market's trying to essentially go down low enough to stimulate demand.
Yeah. And the funds are short in the wheat market and all three exchanges as well. So same question there. Do they keep, I guess, pushing the short side of that market now? Does this give them even more ammunition?
Right now, I think, at this point, I saw nothing on the report, at least on the wheat side, for if I'm a fund trader, to say I need to get out of this position at the moment. They couldn't at any time if it stalls out. But like I said, this report, I didn't give me any ammo to say, yeah, it's time to reverse, unfortunately, for the producer.
Any other advice you have for producers today?
Well, I think I'm going to say, Michelle, I think the biggest problem with producers out there is if you are in the position where you have old crop grain out there, I think you got to get a little aggressive moving it. We are hearing some good basis, but like I said, the clock's ticking and harvest is coming on quick. And, whatever these projected carryouts are, remember, those are bushels we do not need here within the next 6 to 8 weeks. So, the clock's ticking.
Well, it's a tough pill to swallow, Jim, when you got 3.5-year lows in both corn and soybeans at this point.
Yeah, I mean, it's tough right now. I mean, we will see better days, but right now, the reality is what it is. And, we've got a little bit of oversupply and the market has got to find a home for it. And usually to do it, prices go down to stimulate that demand.
Okay. Thanks for joining us, Jim McCormick with agmarket.net.